To Marcus Bogdan. He is joining us with the day's reporting season moves. He's from Blackmore Capital and he's live. Marcus, great to have you here with us. Let's get to one of the companies that has just reported this morning. Telstra is holding its announcement right now, and it has put out a on-market share buyback of $1.35 billion. As a shareholder, what do you think about that?
Well, I think it's illustrative of just how confident companies are in terms of initiating these buybacks. We've seen several already in the reporting season. This is absolutely welcome news from Telstra's perspective. And the quick look that I've looked at the profit announcement, there's really two elements to it. Is that the business is actually returning to underlying growth, which we haven't seen for a number of years. And secondly, it's the capital management, the monetisation of the towers, and that's allowing those proceeds, or 50% of those proceeds, to initiate this buyback. And the dividend has been maintained at 8 cents a share. So net, this is all positive, particularly seeing the underlying trends of the business improving.
Well, where are the underlying trends of Telstra improving? We know that it's a very steady dividend payer. Does that come, though, at the expense of potential future growth?
Well, that's always the balance between reinvesting back in the business and also ensuring that shareholders get a sufficient return. I mean, the key part of Telstra is the mobile business, and from an industry perspective, it does look to be far more rational in terms of pricing between each of the competitors, and also the benefits that we'll see from moving from 4G to 5G. But I think they're striking the right balance. They are reinvesting back into the business, more into software, but then they're also ensuring that we get a good dividend. 16 cents gives you a dividend yield of over 4%, fully franked. Then you get the benefit of the buyback and reducing the share count.
Let's move on to Goodman Group. Very strong performer through the pandemic. We've talked many times about all of the sort of themes moving in the right direction for Goodman Group. It looks like such a strong result coming out at first glance. So revenue coming in at $3.8 billion. That's versus $2.6 billion in the previous period. Shareholders being rewarded with a final dividend. Can Goodman Group sustain this type of growth profile?
It's in the right part of real estate. That's warehousing and logistics, and it is a world leader in this area. And so we do think it can sustain this sort of growth, given its market position, and it can continue to deliver earnings per share growth of greater than 10%. So right area in real estate. I think it's got a long runway, and they've been focused and been able to execute. So we still hold that in the portfolio.
You hold it in the portfolio. Would you be buying at these levels given the price gains that we've seen through the past year?
Well, they have certainly been momentous, but for the medium term and long term investor, we do still see value in this space, particularly if you've got this global footprint and the privilege assets that Goodman have got, and we also like the diversity of their revenue base around development, management, and rent.
Now,
and also had a very strong balance sheet as well. So I think the profits can be sustained and they've got the ability to continue to grow.
Got it. All right. So good to get that instant reaction to Goodman Group and Telstra. We have seen the NAB's quarterly out, cash profit up by 10.3%, pretty upbeat on the outlook, you've got to say, going forward. When it comes to the banks, I mean, we had big news in that it's buying Citigroup's retail business early in the week, but we had Commonwealth Bank yesterday. I mean, shareholders being rewarded for the bank's strength through this pandemic period and the write back of some of those provisions as well. Where are the banks going forward in your view, though, Marcus?
Well, I think they're still in a positive earnings cycle. We saw a strong report from Suncorp. We've seen the confidence in ANZ and now CBA to initiate large buybacks. There's still surplus capital there at CBA, so expect further buybacks. That will be beneficial. But it's illustrative in the price. I mean, CBA now is around 20 times. The dividend yield is around sort of 3.5%, fully franked. And it was notable yesterday that there are still a couple of headwinds there. Whilst the NIM was a strong result, and it was a strong result for Suncorp as well, both institutions did indicate that there'll be further pressure on NIM. And the other aspect, what the banks are sort of grappling with, is that the expense line has been higher and continues to be quite high. There's still remediation costs there, but underlying housing growth, and particularly with CBA, Suncorp and Westpac, they are mortgage banks, and they are definitely benefiting from strong loan growth. And it's interesting that the banks are looking through these lockdowns that we're seeing in New South Wales and Victoria. So net, we still remain positive on the banks, and we still believe that they're in a strong earnings and dividend recovery play.
All right, there's so much to digest. And I know that you're keeping an eye on Marley Spoon. I haven't heard you speak about Marley Spoon, I don't think, Marcus. So what are you watching?
It's the first time we have brought it up, Nadine, and we've been watching this space very, very carefully, and the sort of the industry trends that we're seeing in grocery, this push to online, the very good growth in online that we're seeing in the supermarkets, and these alternative providers in meal kits. This is a very underpenetrated area in the market globally, less than 1% of grocery sales internationally. And this business, and HelloFresh is the other key competitor globally, these businesses are growing at around 30% per annum. They're generating very attractive gross margins. And we still believe that this is a sort of a nascent area of growth. And Marley Spoon is one of two global players in this area. Strong balance sheet, and they've been executing well. They did see some issues around labour shortages and cost inflation in the US, but a call that we were on last night suggests that some of those issues are starting to reduce. And so we've taken an initial position in this company given the recent share price weakness.
Fascinating. Well, I can't wait to follow that story with you. Marcus Bogdan, Blackmore Capital. Thank you as always.
Thanks very much, Nadine.